Good afternoon to our audience. Thank you so much for joining us today for our Money Talks webinar. We appreciate our live audience that's gathered here today on the call, as well as viewers who are later on going to watch this recording on our Capital League TV YouTube channel. My name is Hilton Cole, and I'm the director of Guide Right for the Dulles-Leesburg alumni chapter of Kappa Alpha Psi and a partner of the Endeavor to Dream Foundation. I want to welcome everybody to our sixth webinar in the Guide Right digital series, with the topic today being Money Talks. A little bit of background on why we chose this topic. So throughout the pandemic, we've seen how the virus has flipped the economy upside down. It's created vast transfers of wealth as well as the loss of financial stability for some. It's also caused volatile swings in our stock market as well. The pandemic was unfortunately rougher for those who may have lost employment or lost healthcare. They saw their investments tank or struggle to continue their business operations. We see in times like today where having money in reserve is important, and being financially literate is also important so that you can endure crises like this. There are those that have capitalized on the pandemic to further advance their wealth, and there's those that have found new investment vehicles in order to stay afloat or even stay ahead. This webinar aims to give the audience fundamental tips on managing wealth, from understanding what financial literacy and freedom are, teaching how to budget and how to keep cash in reserve, as well as tried and true fundamentals for investing in the market and growing your wealth. As young men and women, today you have more access than any other generation to financial resources, information, and tools to help you build wealth. And today we want to get you started on your path to being financially fit and thinking about your long term so that you can not only endure crises like today's pandemic, but also have resources to fill whatever passion or purpose that you have. Because at the end of the day, money talks. I'm joined today by four extraordinary panelists who I'll introduce momentarily, who are going to drive the conversation for us of making sense of money, three of which that are going to lead individual presentations, followed by a roundtable discussion, as well as the key message from our keynote speaker to tie it all together. I'll start with Mr. John Morton. If you could unmute yourself and introduce yourself, really appreciate it.
Can you hear me?
We can.
Yes, good afternoon. Looking forward to it. John Morton here. For a full disclosure, I'm coming this from a personal experience. I'm actually in the IT field for the majority of my career. So I'll be sharing just some personal things that have helped me along kind of my financial journey. So looking forward to the discussion this afternoon.
Excellent. Thank you so much, Mr. Morton. Let's give Mr. Selby the opportunity to introduce himself. Mr. Selby, if you wouldn't mind.
How is everybody doing? My name is Trayvon Selby. I'm currently in car sales, have over 6 years experience in sales. And yeah, that's me.
Awesome. Mr. Morrison, your turn.
Hello, good afternoon, everyone. My name is Charles Morrison. I am a wealth advisor for Truist Wealth Management, which recently we merged with SunTrust and BB&T merged to create Truist, which is the 6th largest bank in the country. And I'm a wealth advisor in their private wealth management division.
Excellent.
I'm looking forward to our conversation. Thank you.
Mr. Morrison, I understand that you also have a side gig working for the fraternity. You want to share on that?
Yes, and I'm also the exchequer, which would be treasurer for our Dulles-Leesburg chapter of Kappa Alpha Psi fraternity. So yes, I've been serving now in that role since I joined our great fraternity in 2018. So definitely excited about that as well.
Excellent. So those are our three panelists, and last but not least, I'd like for Mr. Bob Green to introduce himself, who will be giving our keynote later on today. Mr. Green.
Good afternoon, everyone. I am pleased to join you. My name is Bob Green, and I am Chief Executive Officer for the National Association of Investment Companies. We're a Washington-based national trade association that works with private equity, venture capital, and hedge fund firms that are owned by people of color. And I'm delighted to be with you today and look forward to speaking with you later.
Excellent. Thank you so much, Mr. Green. I also understand that you do some work on the side outside of your profession.
I do. I am one of the 12 members of the Kappa Alpha Psi fraternity-wide foundation. We manage the fraternity's endowed money and help allocate it to Kappa's various programs and services like Kappa League and Guide Right and Senior Kappas and the other many other ways in which Kappa endeavors to serve.
Excellent. Thank you so much, Mr. Green. So cool. Before we turn it over to our first speaker, Mr. Morton, just some last minute commentary on today's structure. So each panelist will have a maximum of 20 minutes to share their content. We'll be monitoring the Q&A on the side. So if you're in the audience right now, if you have questions, feel free to type them in the Q&A. Or if you'd like to get on camera and ask each panelist directly, feel free to raise your hand and we can make that happen for you. Later on, we'll have a roundtable discussion where there's going to be back-to-back rapid-fire questions that come through. Feel free to also post your questions there, just so we can get the discussion going. With that said, I'm happy to have everyone here. Thank you so much to all of our presenters. Thank you so much to our audience. I'll turn it over to Mr. Morton now, who will lead us off. Mr. Morton.
Thank you, Mr. Cole. I will share my screen. Everyone see the presentation?
Looking good.
Okay. Well, thank you. Again, John Morton, looking forward to the discussion here. My topic is really on kind of financial freedom, and I'll be coming this, from a personal perspective. Again, majority of my career has kind of been in the IT field. So as a couple of the other gentlemen that are on the line have a little more financial experience than I do, but I do want to share some of the personal things that have kind of helped me along the journey to get me to where I am today. So I'll just dive right into it. What is basically financial freedom? There's really two terms, financial independence and financial freedom. Financial independence is basically the freedom to organize your own life, make decisions, et cetera, without the need of help from other people. Whereas financial freedom is more or less gives you the ability to make decisions based on happiness, essentially not money, living a lifestyle that you want without having to worry or face about anxiety about money. So I put that up to say that there's really two independent terms. You could be financially independent, but not necessarily have financial freedom. But financial independence is a key step toward achieving financial freedom. So what I want to kind of convey in this presentation is really just to take away that you could have all the money in the world, you can have $1 million in the bank, you can have all the stocks, but essentially not be happy. So view financial independence as, hey, I can take care of my bills, I can take care of my expenses, I can live the lifestyle I want. And financial freedom is more about the utility. It's more about the inner, the conscious, the drive that makes you happy, the drive that kind of keeps you going without living essentially paycheck to paycheck. Living the lifestyle that you want that makes you happy without being dependent on the primary job. And I'm just outlining a few steps that really have helped me again, along my financial journey. Again, I've been in the industry a little bit over kind of, 26 years now, since my undergraduate days. But I do want to share some of the key things that have kind of helped me, and the way I've kind of crafted out my journey is really surrounding myself with individuals, surrounding myself essentially with people that essentially have a vision toward finance. I didn't know the first thing about finance. All I knew about is putting money in the bank, saving 3 to 4% interest year after year. Whereas, I had a lot of friends of mine that were being very successful on the financial market. So I just wanted to share some of the things that have kind of really helped me along the way, again, through my career, my journey throughout the years. So the first one is really shift to a net worth mindset and start tracking net worth. And I'll just take a pause. Net worth essentially means not necessarily, hey, you work at a bank or you work at your your full-time job or your part-time job, your take-home pay, but it's your pay plus the assets and essentially your things that you own. You own, if you own a house, if you own stocks, all that stuff kind of goes into kind of your overall net worth. And I know we'll probably get to it more of a panel discussion, but view net worth as your take-home pay plus the assets essentially that you own. The second point is you want to track where your money is going. And I think this is essentially very important. When I was early on in my college days and actually in high school, I was bringing home, delivering papers, working at the supermarkets, living essentially paycheck to paycheck. I really didn't have track where my money was going. I was going out, video games, doing the things that, hanging out with my friends, really not necessarily tracking where my money was actually going, nor did I care. But I think this is an important aspect as you kind of get older, as you kind of go through your high school, your college years, and into the start of your career. It's important to kind of track where your money is going. Then you can start to identify really where I can cut back, really where I made things, separating my needs and my wants. And we'll kind of talk about that shortly. Keep building essentially new skills. Number 3 is, as I mentioned before, I'm in the IT field, but I surrounded myself over the years through my network, through the fraternity, through churches, through the other means, with individuals that were kind of in the financial space that helped me, guide me, provided information essentially along my path. So keep building those skills, and you can do this more now because the information is more accessible on the internet, through media and through other channels. But essentially, keep an eye toward building those new skill sets, not necessarily from a financial aspect, but also an alternate career aspect as well. Diversify, and that goes into point 4, is diversify your income streams and start a side hustle. It may sound funny, a side hustle, but again, you don't want to be dependent on that 9-to-5 job. I think throughout the years when I first started, hey, you come out, you get your job, you had come out of school, you're happy, hey, you're making a good salary, but that's a 9-to-5 job. At the end of the day, you need to start, understanding, what other things can I actually bring to the table? What other things can an alternate revenue stream? Because if I lost my primary revenue stream, my primary income stream, I need at least something to fall back on. So start a side hustle, and there's plenty of ways to do that that we can kind of get into in the panel discussion. Pay yourself first. 10 to 15%, again, it's just a watermark, but it's important as you get to your paycheck, as you get your income, or if you're getting an allowance, whatever the case may be, let's set a little bit away for yourself. $5, $20, $25, whatever, that adds up over time. If you set aside a little bit for yourself, and then go into paying kind of whatever bills that you have, you'll see the power of compound interest take flight. But think about just taking a little bit and putting that aside into the bank or into another kind of a vehicle to pay yourself first. Become an investor. Number 6, become an investor and not a consumer. A lot of days we are actually consumers, and what a consumer means is you wear that pair of shoes, you wear these clothes, you drive that car. So you are consuming essentially those material items that's essentially making someone else rich. So you want to actually change your mindset and really become an investor. How can I invest? How can I partake in some of the things that actually are that I'm wearing, that I'm consuming on a day in, day out basis, and really become a stockholder, become an owner in that, versus just a consumer. Number 7, find mentors, friends, families, online, local experts. There's a wealth of opportunity here to find other individuals, and again, surround yourself with positive individuals that understand the financial aspects for short term, long term, based on essentially your needs, and essentially map out that plan. But surrounding yourself and finding mentors, that has really helped me throughout the years. Keep reading and remain informed. It's always good to kind of pick up that book and and essentially and read and just really remained informed on kind of the financial landscape. A lot of things are changing. I know cryptocurrencies, something that's really being talked about now with Bitcoin and Litecoin and Ethereum, and a lot of the crypto stuff is beginning to take flight. So there's a lot of opportunities there to become more diversified, keep reading, understand kind of what your financial goals are, and really remain informed. And lastly is patience. And I think this is, they say patience essentially is not a virtue. But what I found is you're going to have downs, you're going to lose that job. It's going to be dark periods essentially in your life where you're not going to have any income coming in. And that goes back to essentially starting to hide that side hustle. So, hey, I want to retire in 30 years, but if you were laid off for a year, God forbid, we're just coming out of this COVID situation. And I know a lot of individuals, small business owners, et cetera, were impacted. So that threw an impediment essentially into their financial plan because they didn't have the income coming in. But patience, being able to kind of weather those headwinds that come in essentially throughout your financial journey and throughout your life, and being able to essentially stay the course, still tucking away when you're not having income, still tucking away that pay yourself first mentality. Now, we talk about financial freedom. I touched on these in the previous slide, but again, financial freedom and again, this is just John's opinion, is more of a utility. It's more of kind of, okay, what really makes me happy? How can I have essentially passive income, where passive income means I'm not dependent on that 9-to-5 job. I have either rental properties, or I'm getting income in from my stocks or other investments. Those other income streams are providing you enough passive income to support basically your expenditures. So your passive income is greater than essentially than the money that's going out the door. Eliminate debt. That's a big thing. When you get into school, you see a lot of these credit cards. I got caught up into that. I was around campus, so I signed up for my first credit card. There you get $1,000, and you kind of go out and take the young ladies out and go out to get that meal off campus, and lo and behold, you've got $700, $800 that you've accrued on your credit card. Well, if you look at that fine print, that credit card's at 29, 30% interest. And if you don't have two nickels to rub together, or if you're making minimum wage, that's you're starting a debt hole that's going to be very difficult to get out. And it took me essentially years to get out of that hole, even after I left the undergraduate time. So eliminate that debt as much as possible. Again, that goes back to tracking your expenses. Managing your money. Again, understanding what your inflows are, what your outflows are, needs versus want. Planning. Have a financial plan. It doesn't mean you have to sit down with an advisor, but just think about, where do I want to be a year from now? Where do I want to be 6 months from now, both long term, medium term, and short term, and making sure that plan that you're setting aside is essentially a stepwise process to get to where you want to be 30 years from now, where you want to be in retirement life. If you want to retire early, if you want to own a couple of houses, whatever those aspirations are, plan those things around it and stick to that plan. Reduce expenses. That goes back to, again, eliminate debt. That's eliminating the waste, tracking and understanding where your money's going. If I've got to pay, if I see those new Jordans that are coming out, do I really need a pair of shoes if I bought some shoes 6 months ago based on the brand name? So think about, even though my friends are doing those getting those things, I have a long-term plan. I want to stick to that plan. So I'll go to DSW and get those shoes. Learn about investments. Again, it's not just putting money in the bank. And I'll touch on a couple of these things. There's other opportunities to make investments in other areas just besides, the bank account. Increase your cash flow. Again, alternate income streams. Think about other ways that I can position myself. You can get part of investment clubs. There's a lot of online activity, as I mentioned, cryptocurrency, which is another aspect, stocks. So there's a lot of ways you can kind of increase that increase that cash flow as well through those alternate income streams. Become a minimalist, simplify your life. And I'm learning this right now. Over the years, I've accumulated a lot of stuff. I've accumulated some things. I don't really, for example, my cell phone plan. I just really reduced some of the usage of my cell phone plan, and that cut off $30 a month. May not seem that way, but simplify your life based on what you need. And essentially your goal, your short-term goal, your long-term goals, your medium-range goals. Have those goals, stick with them, write them on the board every day, or just every day should be a step towards some goal, some objective. Okay, financial freedom and debt. Basically, I'm not going to read everything here, but I just wanted to kind of show you the difference, or kind of compare and contrast of financial freedom versus kind of a debt scenario. I'll just touch on a couple of these things. We touched on these before, but I do want to drive them home. If you look at the left, most of these we talked about goal driven, pay yourself first. And if you contrast it to the right, debt is work driven. So I'm in debt, I'm living paycheck to paycheck. I have a goal, but I never essentially come out. So work is essentially driving a lot of the debt. You don't want to you want to pay yourself first. Debt, you're paying kind of others first. We talked about investing. I don't know if you can see my cursor. Invest money versus spend money. We want to make things happen. Make things happen for yourself. Things happen to them. You want to be responsible, but don't blame others. Think in solutions, and I think this is important. Think long term. Think about what I can do to solve my problem versus don't have a problem and leave it for someone else to solve. Take ownership, take accountability of those problems. We talked about the COVID situation and people losing their jobs. You're going to have those dark periods, but think about, how can I get through this? What are my options? What are my alternatives? And taking kind of a risk-averse approach. One thing that's helped me over the years is basically this notion of a 50-30-20 budget. I've got 3 categories really to simplify it. There's a little more underneath the iceberg, but this is kind of at the top level. 50% of your income essentially should cover your needs. These are your things that your roof over your head, the rent you're paying in an apartment, or the mortgage that you're paying on the house, or that car note, the utilities. These are things that you have to essentially pay for. So that typically covers about 50%. Your wants is about 30% or so. And then your debt and your savings essentially is about 20%. Now out of that debt and savings, you want to do that's where your 10 to 15% of your pay yourself first. But if you think about it in kind of your needs, your wants, your debts, and your savings, that will start to help drive some of your kind of your financial planning, your goals, and you're tracking your expenses and those types of things. So, but throughout the years, I've always kind of kept these 3 things, these 3 categories essentially in mind, that it's proven very successful for me. And this is a notional chart. I just wanted to share, really, I touched on the power of compounding interest. But I just wanted to kind of give you just a sense of starting early and making an investment, either putting it in the bank or putting it somewhere. At age 30, the way this chart is reading is that basically at age 30 or at age 25, or you can take it any way you want. The idea is that half your salary, essentially, that you should have half your salary that you save. So if you're making $50,000 at age 30, ballpark wise, you should have about $25,000 saved. That's essentially a savings benchmark. You should, and again, it goes up year after, it goes up kind of every 5 to 10 years. Now, I started late in the game. I probably started at about 35 or so. But I kind of went in an aggressive spending schedule. But I just wanted to kind of leave this with you, because as you progress through your high school years, as you progress through your college life, and then you get that first job, again, think about the savings, and think about putting that money away and letting really the power of compound interest over time take care of achieving or taking care of getting to you that financial independence and ultimately financial freedom. The takeaway is the later you wait to start saving, the more you have to save in order to achieve those particular goals. So start early, put away what you can, $5, $10, $15, $20, whatever you can put away, leave it alone and let that run for the next 25, 30 years. And you'll be surprised how much you have later on. There's a book I read a couple of years ago. It's from Rich Dad Poor Dad. It's and I have it in the reference. It's a really good book. It's a fairly easy read, but I wanted to leave this with you because it talks about really the mindset, so to speak. This gentleman, Richard, woke up. He had two dads. He grew up in Hawaii. He had a rich dad, and essentially he had a poor dad. His rich dad essentially, is on the left. He looked at taxes, reward those who produce. The rich should pay more in taxes. The poor dad, study hard so you can find a good company to work for. Study hard so you can find a good company to buy. So look at these bullets and you can kind of see the different mindset change between the poor dad, which is okay, saying, I'm working for my money. I'm working for my money. Basically the poor and the middle class, they work for their money. The rich have money that works for them. So I wanted to leave that with you, plant a seed to say, going back to the financial freedom, it's a mindset change. You could be financially independent, make your money as you go through your work, start to work for you. Ultimately, you'll become financial free. And lastly, just wrap up with a summary. It's a mindset. Financial independence does not apply financial freedom. Start investing early with the goal-based approach. Diversify for portfolio, stocks, bonds, liquid assets, mutual funds. I threw in cryptocurrency. That's starting to take flight. Again, the power of compound interest. You can't go wrong with that. Putting money in the bank, putting money in bonds, things that are going to give you that guaranteed year after year return is always a good bet to include that in your portfolio. Last, prepare for life's uncertainties. Life is going to throw you a curveball. Life is going to, who knows? Who could have predicted we would be in a pandemic for a year ago? Hopefully we're turning the corner, but life is going to throw uncertainty into your financial landscape. You have to be prepared for that if it surfaces. So you build a contingency fund. You pay yourself first. You don't get those pair of shoes. You keep money away essentially if you lose your job, if you have a family and you're the only source of income. So make sure you have that contingency and keep that in mind. Insurance, as you get older, medical, you're going to have those. We're not getting any younger. We're going to have those medical bills come up. You may have that surgery, God forbid, and it's going to set you back $200,000, $300,000, $400,000. You have to be able to sustain that and still move forward with achieving your financial objectives. And lastly, and I live this throughout my career and throughout my life, is basically use the SMART mentality. These are SMART goals. Make your goals specific, make your goals measurable, achievable, realistic, and time-bound. I think if you take these concepts, you'll be well on your way to financial freedom. Thank you.
Awesome. Hey, Mr. Morton, thank you so much for that excellent presentation. Before you reach for your water and take a sip, I did have some questions that did come in through the chat. So let me kick these to you really quickly. So one question, as a junior in high school, what should be my first priority right now? Should it be investing in the stock market, securing a main source of income, or should I be thinking about the side hustle? What should I be focusing on right now if I'm in 11th grade in high school, based on what you just spoke about today?
What you should be focusing at, I'll share what I did in high school. I went out and I was working. I got a main source of income. Yeah, they get a little allowance from my parents. After high school, before high school, I got cut off. And I attribute it to my parents is that you have to be able to stand on your own 2 feet, even though you're in high school, you're living at home. Stand on your own 2 feet. Go out and get that job, whether it's in the local grocery store or retail or whatever. But you got to have, I think, your first step. The step that helped me is my main source of income. And the reason why I say that is that it helped me because I was out making the money, and then I started to kind of then get my independence from essentially my parents. I didn't need that allowance anymore. So the things that I did from that main source of income essentially helped me move along the way. So to answer your question, I would say that main source of income is the main job, would be your first step. Now, from that point, then you can start applying the rules. Leave $20 away, $10 away, whatever the case may be. Then your main source of income, then start saving. Start off with a bank account, something that's guaranteed, 3% interest, 4% interest, 5% interest. Start off with those guaranteed things, get yourself a nest egg, and then move forward from there. The last point I do want to make is traditionally, as you get older, you typically want to have 6 months worth of money in the bank, or money that you can kind of, I'll say liquid, that you can really put your hands on right away. So if you lost your job, you could still sustain yourself for at least 6 months.
Awesome. And then one last one for you. This one should be super easy. So you're not a money man. I'm not a money man. You're in IT. I'm in IT. If you work in IT, you know that the basis of making good decisions is having good data, having good information available. So talk to us about what are the outlets that you follow in the media, where you get your financial information, and then how do you vet it?
Sure. My personal retirement account is with a lot of my investments are through Vanguard. I do a lot of online investing. And there's a lot of them out there. Vanguard's been helpful for me. I've relied on them essentially throughout the years. So what's really helped me is really just kind of research through my retirement account, through talking to people essentially online. I have people like good people like Bob Green, and I have other individuals that are kind of in my inner circle, so to speak, that are more financially astute, and it's listening to them and understanding what has helped them, what has helped me, being able to have that sounding board, specifically when you go through dark periods. So that's really what's helped me, is surrounding myself, a lot of personal time through Vanguard specifically, and kind of through other means essentially as well. I started dabbling in the cryptocurrency recently too. So
we're going to talk about that later. And Mr. Morton, we really do appreciate you. Thank you so much for your time. If you in the audience have any more questions for Mr. Morton, feel free to pose them in the Q&A. We'll be coming back and hearing more from him from our roundtable discussion. Right now,
do you mind if I follow up on the first question that the student asked, that the person asked?
Very quickly, yes, go for it. And then after you finish answering, you can go ahead and have the floor.
All right, got you. I just wanted to follow up on that. Due to the fact that when I was in high school, I wasn't really aware of investing, budgeting, saving, and everything. So, like you said, you're 11th grade. You're just wondering about whether you want to focus on a job, investing. I would say nothing's really wrong with ever being knowledgeable and working on your knowledge. So, even though you're working, put an hour a day to learn about a new investment, learn about a new way, a new business, a new way to create passive income. Just always be knowledgeable, be a sponge, because there's so much out here, and there's just so much available online nowadays. So I just wanted to share my 2 cents on that. So once again, my name is Trayvon. I'm mainly going to be talking about budgeting. I don't have a PowerPoint prepared because I'm usually a person that like to come from the mind, like to come from the heart. So that's just me. Um, Nice to meet everyone again. I want to start off by saying budgeting isn't something that just happens. It's a lot of what I'm going to say too is going to follow up on what Brother Morton was saying, because what he was saying was he dropped so many gems. A lot of what I was going to say. So budgeting comes into play when you finally make that decision that you're ready to take the next step in, whether it's financial, whether you're budgeting for a trip, groceries. It can be for anything. A budget can be for the smallest thing. It can be for going to a grocery store trip. It could be for anything. And as an adult now, I know that because I budget for the smallest things. Next weekend, I'm going home to visit my mom. I'm budgeting just for the gas. I'm budgeting for the weekend hotel. I'm budgeting just for what I need to eat for the weekend. So things like that. It comes down to the smallest part. And a lot of people don't realize that a budget can be passive. It can be active. And what I mean by that is this year alone, I started a budget of picking up coins every time I go to the gas station. Every time I'm walking around Walmart or going back to my car, I may pick up a penny, I may pick up a quarter, and it goes right to a jar when I get at home. That's a budget. A lot of people don't realize that that's a budget, because in 20, 30 years from now, all that's going to add up, and that's going to be maybe a couple grand, may surprise me, be like 10 grand. That'll be amazing. But that right there is a small thought right there. That alone can be a budget. Pennies add up. It's the small things over time that you continue to do that add up to make a big value. So a lot of you guys are young. You guys are wondering where I'm going in life, or maybe getting on the college track, maybe just trying to establish of how you're going to do this and get a game plan going. So my first recommendation is a planner. A planner is the best way to go. I call it the 30-30-30 rule. So it takes 3 months actively to start a habit, to continue a habit. So if you get a planner and you start writing in your planner everything you're going to do over time, whether it's 3 months in advance, just planning ahead. If you know you got a birthday coming up, okay, boom, it's a birthday that day. I know I'm not available that day. I got something to do. If you know that you have a long week coming up the next month ahead, just plan ahead. That 3 months advance could do you a long way. So the next step is writing down how much you actually have coming in monthly. When you write down how much you have coming in monthly, you then need to realize your needs. Your needs are the most important thing when you're budgeting. So I know you guys are all young. You might not have rent. You might not have a cell phone bill. Your bills may be different from what our bills are right now. So you guys may have a cell phone bill right now. If you guys are driving, you may be putting gas in your car. If you have a car, anything that is a necessity that you're paying towards is a need. So first things first, budget out all your needs. You have your monthly income, whether it's 2,000, whether it's 1,000, whether it's 800. You have your monthly income. Now, minus from that income your needs, what you absolutely have to have or have to pay for on a monthly basis. I know my cell phone bill is about $85, so I'm going to subtract that from my monthly income, and that's how, when I subtract all my needs, that's when I have the total of what I actually have left to spend, whether it's for personal reasons, whether it's a video game, whether it's shoes, whether it's out to eat, whether it's activity, bowling, arcades, anything in that nature. I know now what I have to save. I know what I have now to spend freely before I'm actually to that point of where I'm broke, basically. Well, yeah, basically. But while you're budgeting as well, when you do manage your needs, you also want to minus that additional income of where you want to put to the side, like Brother Morton was saying, to save and compound over. So that's when it comes to play of knowing where to really allocate your money that it can build over time, because you guys are young. And when I say now, it's really the best time, I like to put emphasis on this, the best time possible to really start learning how to invest and build your money over time. Because I promise you, $20 every month. Like I just saw that. I'm just using him. So he said he was a junior. $20 from now every month up until your adulthood, whether it's 25, 30, it adds up. It adds up a lot. And it's something so small that could turn out so big in the long run. It's just a matter of sitting down and actually doing it. That's the hardest part. The hardest part you're going to hear about everything we say today from all panelists is the action behind it. You will have a lot of friends who say, I want to own a business. I want to be general. I want to take care of my family. I want to break the barrier. I want to do this. I want to do that. But they have zero action, like zero action at all. So that's the main thing. You got to have the action. You got to have the motivation, and you have to want it for yourself. I can promise you, you have to want it for yourself. Nobody else is going to want it more for you. Like I can promise, like I want it so much for my friends, but if they don't want it for themselves, they're not gonna get that same level. They're not gonna get to that same level. I can want it as bad as I can want it 150% for you. But if you don't have it in your heart, yourself, to get to that level, to sit down and be active, to sit down and learn, to sit down, allocate your budget, to sit down and basically do something that's going to better you in the long run, is not going to happen. So the action behind it has to be there. It has to absolutely be there. So another thing with budgeting is just being patient and not deteriorating from the goal. So write down your budget goal. If you're budgeting for long-term reasons, as in just to build income, build financial freedom, and eventually purchase an asset, whether it's a business, a vending machine business, or anything. Just write down the reason what you're budgeting for. Right now, I'm budgeting for a long-term gain, just to build long-term assets, to purchase properties, everything of that nature. So write down what you're budgeting for. Once you have that goal in mind, that's when you really can start putting the action behind it and putting away and putting aside everything to reach that goal. So that's mostly what I have to say on budgeting. I did want to tap into just being a sponge as well too, because that's my main thing, is really learning. That's the best thing you can do for yourself, is education. And YouTube can teach you so much nowadays. If you just Google YouTube investing, and you'll see so many ways. Like most of you probably wouldn't even know that a vending machine costs around $1,500. That may be a lot in your eyes, but $50 a month to the side could add up to $1,500 in less than a year. And now you can already start having passive income from a vending machine business by the time you graduate in college. That's something just to throw out there, like small stuff like that you see on a daily that you may use. You may think it's expensive to start up to create passive income for yourself. It's not even that much. It's all about, you can create a budget for that to start your own business, LLC, everything like that. So you guys are in front of great people today who's blessing you with so many gems, so many ways just to create income, create passive income, budget, and investing as well. So I hope you guys are taking notes. We definitely have an open discussion at the end of the call. So hope you guys are learning something. Nice talking to you. That's my 2 cents.
Awesome. Hey, Mr. Selby, thank you so much for that presentation on how to make your first budget. A few quick questions before we move on. So you mentioned, getting everything down on paper. I'm sure you meant that as an analogy. You didn't mean it for real. My question is, what are the tools that you use in order to make your budget? You know, if it's spreadsheets or if it's an app or software, what tools do you use to manage all that?
So I use Excel. I have one of my friends teach me, because I'm not the best at Excel myself, so I'm still learning. I took a class in college and didn't do so well. So I actually use Excel. I'm working on getting
It's all good.
using Excel myself, but Excel is something I use. I know there are a couple of apps that you are able to use to budget. So if you wanted to enter it manually and they'll show you the numbers right away over a certain amount of time where you'll be at, I can get those names and refer them to Hilton, to Brother Cole, and he can have those to you guys.
Awesome, awesome. And then you mentioned, I absolutely agree with you that today, knowledge is so visible out there, from Google, from YouTube. My question for you is, what are your favorite YouTube channels to follow for financial literacy, and what's happening in the market?
Well, I have many.
Top
So
three.
is one podcast I listen to, a motivational speaker. I'm trying to remember his name because I don't want to get it wrong. It's kind of hard to pronounce. I'm gonna relay that to you as well. But I listen to a motivational speaker, but I also follow a lot of crypto traders. So if you go on YouTube and you just Google E3, I have a hard time pronounce Ethereum.
Ethereum.
Ethereum live. If you literally just YouTube that and live, you'll see a lot of live traders up there who teach you free knowledge about investing into markets, investing into Bitcoin. Just to throw another thing out there, I know a lot of people have Cash App. I know you guys aren't too young to have Cash App. So if you have Cash App is another way to invest your money. Simple. You actually have Bitcoin on your Cash App. If you did not know, you have the stock market. You have access to the stock market now on your Cash App. So if you go to your Cash App, you literally will see the stock market currently. Well, it's not moving right now, but you have access to it on your Cash App, and you can currently invest in the stock market from your Cash App as little as $1 and just watch it grow over time. So definitely look into some that as well, because I currently invest in my Cash App too. Yeah.
Awesome, Mr. Selby. Hey, thank you so much. We really do appreciate you. And then last but not least, we have Mr. Charles Morrison, who's going to walk us through a little bit of investment strategies. Mr. Morrison, whenever you're ready. Uh-oh, Mr. Morrison, are you talking right now? We can't hear you.
Can you hear me, Mr. Cole?
We can hear you now. Go for it.
Okay, perfect. So I definitely appreciate the time this afternoon. I have a tough act to follow with Mr. Morton and Mr. Selby, but I should be able to create some additional value. So far we've spoken about, budgeting, putting a budget together and going over what our needs and our wants and our long-term goals are. Mm-hmm. So after we've made a budget, where should we put our funds? Because if, traditionally in banking and financial services, after you have that 6 months cash reserves for emergencies, and for younger persons in their career, they should always invest in their retirement accounts. So you have 401ks at your job. So that's the easiest way to begin investing as a young person starting in a career, in your first career, is to invest in a 401k. So a 401k is essentially a retirement plan that your employer sponsors for you. And many times they max the contributions that you contribute to your 401k. So I always recommend after you've saved, you should invest in the 401k first, because that's something that your employer is already providing you, and they're many times willing to match you. And then you have your cash reserves in a money market account. Right now, we're in a low interest rate environment, so money market accounts aren't yielding as much of a large amount of interest as they did maybe in the 80s or the early 90s. Right now, in a money market account, you're looking at maybe 50 basis points, so less than 1% yield in those accounts. So cash is really not a good place to be in long term. And for so part of my job and how I work with clients is where can we begin to allocate funds that you have that are going to earn a better yield of return than a money market account after you've already contributed to your 401k plan. So we take just an assessment of where you are in your plan. So you have goals where you may want to retire in 20 years. You may want to leave a legacy for your children and your family. So how do we get our clients there is the questions that I'm being asked every day. So typically, depending on your age, your risk tolerance, your appetite to investing, we take a very calculated approach, and typically we do a combination of many different assets. We look at stocks. So stocks are essentially just ownership in a particular company. So, Nike, everyone likes Nike. You can, I'm always an advocate of investing in companies that you support. So you have Apple, you have Nike, you have plenty of blue chip stocks and goods that you use every day. You can start there by investing in those particular companies. Then you also have bonds. Bonds are typically more stable and a bit more conservative of an investment. And what bonds are, it's essentially you're lending money to a particular government or local municipality or a corporation with the understanding that at a certain maturity date, you're going to receive the principal you put in and interest on top of that principal. So we invest in bonds. We also invest in real estate. Having a balanced portfolio should have stocks, bonds, and a portion of real estate. Now you can invest in, of course, the rental properties. You can also invest in something called REITs, which are a collection of different real estate positions packaged in a form that can be traded on an exchange. So definitely having some real estate in your portfolio. So I typically recommend, of course, after you purchase your own home, consider having some type of real estate in the form of an investment or even a vacation home that you can consider renting out during the summer as well. So, and then there's plenty other different types of investments that people don't even think about. Artwork, fine artwork is an investment. So if you like art or even if you like to collect rare coins, those are investments. So artwork, coins, even investing in your own business. So if you have goals and aspirations of wanting to start your own business, get together with your friends, have these type of conversations. What can you be doing now to get yourself to the next level? So that's one of the biggest investments, is investing in yourself and investing in your dreams. So that's what, we tell our business owner clients, hey, we're going to be able to definitely earn you, a great deal of return that's going to hopefully outpace the benchmarks in the current market. But ultimately, your biggest investment is in investing in yourself and investing in your business. Is one of the biggest investments. And then some other traditional asset classes we like to use are gold. So having gold and precious metals as part of your portfolio as well. So those are typically very stable assets to have in environments like this, where the market can be up and down based on a lot of geopolitical events going on in the world. So, and then we keep in mind what tax implications are related to investing. So, we want to earn money, but we don't want to necessarily have to pay everything back in taxes. So what tax deferred or tax sheltered vehicles should you be thinking of? And going back to my point would be, once you're able to contribute to your 401k, those are tax sheltered vehicles. IRAs are tax sheltered vehicles where you're deferring taxes until you reach retirement age. And then even if, we're in the government, a lot of local people here work for the government and have access to pension plans. So those are great retirement vehicles as well. If you intend on graduating and going into the government, make sure you invest in that 401k and make sure that they have a pension plan, and that's something you should be asking for. So things you can be doing today to help prepare you for the future are the type of conversations that I have with clients, and sticking to that plan. So just like Mr. Morton and Mr. Selby said, having the plan in place, whether it's with a professional financial planning organization that I work for, or just back of the napkin, QuickBooks, financial plans are key. So you have a target, you have a goal, and what investments can I do today to help me reach those particular goals? And then just reading. I would say read. Reading is one of the most important things when we talk about an investment. So I would read the newspaper. Keep it simple. You can read the newspaper. You can read the Wall Street Journal. You can read Bloomberg. So just keeping yourself up to speed on what's going on, just politically, and go over the course of different industries is important, because before we make investment recommendations, we need to consider the tax consequences, the political consequences, what's going on in the economy. So these are all things you should be well versed on, and then it'll help make what to invest in a whole lot easier. So I'll pause right there. I know we're approaching 4 o'clock. But Mr. Cole, is there any questions in the chat box that I can address?
Yeah, so you mentioned gold. So talk to us a little bit about what's so special about gold as an investment as an investment vehicle during this period that we've been in the pandemic. Like, why is gold exploded? What's so unique about that versus, say, real estate, bonds, et cetera?
Well, I like gold. Gold is typically a natural hedge against inflation. So having those are very stable currencies, very stable commodity to have, because everyone across the world uses gold. Okay, gold or silver, it's international. So having a piece of that in your portfolio is essential, because it's kind of recession proof, to say the least. But typically we recommend maybe 10% of your portfolio should be have a mix of silver and gold. And now you can buy gold through even hard actual golden bars or golden coins, or you can buy them on exchanges, packaged in like a gold ETF that you can buy as well. And then, we start off by even starting a brokerage account. So, I usually use Fidelity for my own personal brokerage accounts, but you can start off your own brokerage account, begin to buy 1 or 2 stocks, buy Nike, buy Apple, buy stocks and companies that you believe in, and you can start from there with just a small percentage. So, you may receive Christmas money, you may receive birthday money. Start collecting that, or having your family members invest in that and say, hey, for my birthday, I'd rather you send me a check for me to add to my brokerage account than a new pair of Jordans or a new pair of, what's the latest video games or what have you. But that's something you can do now. And and show the initiative that you're serious about wanting to do better. So
I like that. I like that a lot. I really do appreciate
Yeah.
that answer. And then another question I have for you. So when conducting research on where to invest, how do you vet it? How do you qualify if it's a good investment or something that might be a scam or something that might be a risky investment where you can lose all your money? Just to give you a bit of context, I'm sure you know what's happened with the GameStop situation. I'm not sure if
Yeah.
it's on social media, but there's a whole bunch of accounts who's like, hey, give us $50, give us $100, and then that money just goes down the pit. So how do you qualify that stuff? And how do you do the best research?
So typically, at where I work, I'm fortunate enough that our company, we have an approved investor list. So these are approved companies and investment funds that we're able to work with. But as an individual, without access to a large bank to do most of the research, I would say use credible sites such as Fidelity. You have Fidelity does research. Morningstar does a great research. Bloomberg, you can get great research on Bloomberg. So very credible brand name sites to go to, and between reading those, looking on those apps and those sites and reading that along with reading the newspaper, you'll be able to kind of take 3 or 4 different opinions and create your own opinion on how you feel about a particular industry or a particular stock you should buy.
Awesome. And then the last question I have for you, just based on what you just said. So let's say I'm in high school right now. I might have like $50, $100 to my name in my bank account. So just tell me a little bit about the difference, and because for some of those subscriptions you have to pay for. So Bloomberg, Wall Street Journal, Business Insider, you have to pay for. What's the difference between getting information like that versus information that's found on CNBC, Fox Business, Washington Post? What's the difference between the quality of information?
Typically, they've done is more granular in the fact that they'll have more historical data on a particular industry, more individual kind of historic data on that particular company and industry, along with the expert opinions. On a lot of the other periodicals that you read, it may be more opinion than actual hard data base that you can kind of vet yourself. So those are kind of the differences with paying for a subscription. But I know the Wall Street Journal, they do a student subscription as well, and I think that's about $4 a month or something like that. So it's not too bad.
You guys pay $4.
Yeah.
Awesome. Sam, Mr. Morrison, I really do appreciate you giving your take on different investment vehicles that you can put your money into. You talked about the stock market, you talked about bond market, you talked about if you go into a situation where you have a job, you talked about what a 401k is, gold.
Yeah.
You talked about where to get good information. We really do appreciate you. I wanted to now keep you here, and I wanted to bring Mr. Morton, Mr. Selby, and Mr. Green, our keynote speaker. Feel free to jump in to our roundtable discussion where I had a lot of questions for the group. So I wanted to go back to some content that was covered in Mr. Morton's presentation, but I wanted to open up the floor to our other speakers. So what are some of the biggest milestones that I should be looking to hit financially by the time I'm 20, by the time I'm 35, by the time I'm 50, in order to claim financial freedom? So biggest milestones that you should be looking to hit: 20, 35, and 50.
I would like to start off by answering this one. That's a great question, but at the same time, I would say there's no time limit in achieving financial freedom, if that really makes sense, because some people may achieve it early in life, and some people may not get to that point of financial freedom till they're 50, 60, sometimes 70 maybe. So, but I would say if you have an age in mind where you want to be at a certain point, as in wealth, you need to follow the steps of budgeting, saving, and learning those different ways of investing your money to gain that capital that you need to be at that point in time. And plan for the setbacks as well, because it's always going to be some losses on your journey. It's not always going to be butterflies and rainbows. So you may have a good year of budgeting, saving, and you may have 100K year in profits, and then the next year you may take a big loss and have only about 15K, maybe 20K in profits. But that's where planning comes in play as well too. So you make up for those losses, or they become break even. And a break even is basically where you're not really losing or not gaining. You're just at the same point. You didn't gain, you didn't lose, but it's not a bad thing though.
Yeah.
Oh, go ahead.
So, Mr. Cole, the question is probably one that most people struggle with in life, because they don't ask themselves that question to begin with. They just sort of take life as it comes. They're predictable and unpredictable parts of life for the most part. If you are in high school today and you make a plan or a list of things that you want to do in life, you want to go to college, right? You may want to go to grad school. You may want to get married. You may want to have kids. You may want to send your kids to private school. You may want to send your kids to college. You may want to buy a house. All of those are things that you can list. And if you want to do them, for the most part, you can control doing them. I mean, you may or may not can control getting married. You may or may not can control having kids. But for the most part, you can control those things. Then you have to factor in the things that you don't control in life. Do you get sick? Is there a delay in some period of time when you are going to be working and not working? John Morton talked about that. Do you have to take care of a parent, right? Do you have to, did any number of things happen? And when you put those two things together, it's very similar to what Trayvon has said. Those are the things that are all going to determine when and how long it takes you to become financially stable, right? There is a place in time when you've saved enough money, when you've earned a significant amount of money, and when you've conquered enough of those life challenges that you can look out and you can say, you know what, with the exception of getting sick and having some major illness happen, which you're insurable in most cases for, I'm in a pretty good situation now. I can do certain things differently now. But the best example I can use is the rocket ship example. When you first take off, coming out of high school, going into college, going into your first job, you spend most of your fuel trying to get some altitude. And that fuel it equates to dollars, right? We all have friends and you just shake your head and you're sad, but you're like, man, he can't get right. He can't catch a break, right? He gets a job, he buys a car, he wrecks the car, the got a speeding ticket. I mean, just one thing after another, and it's harder at that stage in life. Well, as my dear fraternity brother, John Morton, will tell you, when you get to be our age, things tend to stable out a little bit, right? I mean, those, it's not that your luck gets any better. It's just that life has a different set of things that you face. So this is a long answer, but you have to aggressively save in the beginning, because you have no idea, in addition to the things you want money for, you have no idea what you're going to need money for. So 20s, 30s, 40s, 50s, there are different things that happen in each of those stages that require some measure of money. And then when you feel like you've got the whole thing worked out, now you start wanting to retire because your mind and your body are getting tired to that place where you don't want to do certain things anymore. So there are challenges at each stage and there are behaviors at each stage that are best practices.
And just another thing too, what you want right now may be completely different when you're 25, 30, or even 3 years from now. Because when I was 16, 17, 18, what I wanted around that time in life is completely different from right now. What I was doing at that time of life is completely different from right now. And by what I mean by that is like my wants back then was completely different. I wanted shoes, I wanted clothes, I wanted just a good life. I wasn't thinking about investments or saving or budgeting. And that's just because around that time I didn't have nobody like you guys have right now, guys telling me what to do or the route to go about saving my money or the route to go about long-term growth financially. So that's another thing as well I want to say is just whatever you want to do right now, it can, I promise you, it can change. Life just has a funny thing of a funny way of moving, so you just never know what's going to happen. That's not a bad thing as well. You could want to be a lawyer right now, then 5 years from now you could want to be a nurse. You just never know. So always be prepared for the changes. There's nothing wrong with it. Just always go with your heart.
I like that. I like that. So just bouncing off of the energy that you gave, Mr. Selby, and you too, Mr. Green. So along the same line of thinking, what are some of the mistakes that you see, having been there, done that? What are some mistakes that you see that young people make earlier on that negatively impacts them financially later on in life, from your perspective?
Yeah, John Morton touched on it. Debt.
Oh.
Period and simple.
Yeah.
Debt has become easy to get into.
Mm-hmm.
It plays into your psychology of needs. When John and I went to school, every stairwell, every dormitory, every bulletin board you passed was a credit card application. And the first two came real easy. They start you off with a $500 one. That thing would hit before the next weekend, and whatever it is you plan to do, road trip, new clothes, car payment, whatever it was, you could get it. But somewhere between easy credit card debt, student loans in excess of the cash you actually need, let me be honest with you, there's no such thing as a refund check. A student loan is not a tax refund check. A student loan that you got a check back from is an excess loan. They gave you more money than you would need because they wanted you to have more debt than you needed to pay that bill. So you didn't treat that additional $2,500. You didn't treat that like a student loan. You treated that like you just got paid, and you ran out and you frivolously spent it on a variety of different things. And here's the worst part about it. It doesn't say anything about whether you're a good person or you're a bad person. You're a human being. And the hardest thing to do is to temper your wants and your desires for something that you should or shouldn't have. And so the biggest mistake you can make is bad debt. The second biggest mistake you can make is staying in it for a long period of time.
I like that. So staying on the
I got to touch on what he said about refund checks.
you got some stories?
Yeah, I got to touch on what he said about refund checks. Especially since these guys are coming into college real soon. When you get into school, basically he just described it perfectly. You're going through financial aid. You basically are, once you're off campus, you're basically granted about $7K, depending on, it can be more depending on your situation. I've seen people from $15,000 refund checks. But like he said, it's no such thing as a refund check. It's basically excessive money that they're giving you. But you're blessed. I'm going to say blessed because obviously if you're a college student getting $7,000 every semester as a check to go towards your personal needs, which is supposed to be used for, that's a blessing. But you still are able to use some of that money to invest. And that's something I wish I knew when I was in college with my refund checks. My first two, I did use the correct way. I just paid off my rent for the whole semester, got some groceries, basically got household needs the correct way. But towards my end in my senior year, my last two refund checks, I put $1,000 to the side, and I was able to flip that $1,000 to an extra $2,000 and make more off that refund check. So now that it's like it's basically equaling itself out. So that's definitely something to keep in mind if you guys, when you guys do get to school, those refund checks, be smart with them, please do. You will see a lot of kids spend them on things they don't need, pool tables, shoes, anything. Just be smart. Be smart.
And Mr. Cole, I'll add real quick to that. As you're entering into school, when we talk about student debt, what can you do to help control some of that debt? And what I mean by that is, and try to make it easier on yourself and your parents. Could you be applying for scholarships to go to school? How many, there's tons of scholarships that several organizations like Kappa, we have a scholarship fund. Churches have scholarship funds. A lot of nonprofits have scholarships, and many students don't apply for these particular scholarships. So can you, what else can you do? Can you have a part-time job? Can you work at the student center, I was an RA at school. So as a resident assistant, I received room and board for free. So that was thousands of dollars back into my parents' pockets. What I can say as well is, sometimes you get caught up into big name schools, needing to go to, a UVA, a Duke, or North Carolina. To be honest with you, the education is almost the same as going to a mid school. Yeah, but you're paying thousands of dollars just to say you graduated from Duke University. And then if you are going to go to those big name schools, make sure you can get some type of scholarship or some type of aid to make it easier for you and your parents. And then also maybe consider staying in state, or even doing community college for 2 years. So you'll have an associate's degree. So you have a degree, and then you finish at a University of Maryland, a UVA, a bigger school, those last 2 or 3 years that you have in school. So what can you do to help mitigate some of the debt on your end? Will make it a whole lot easier when you're in your 30s and you're looking to raise a family, and you want to buy a home, and now you're strapped with student debt because of decisions you could have mitigated earlier on. So I'll leave that there. Mm-hmm.
Let me just tag on one quick point. Don't let debt dictate your career, though. And I say that to say I know a lot of friends, colleagues, former colleagues, etc., where they wanted to go into the medical field, for example. When you come out of undergraduate, you've still got your medical school to go through, you got boards, you've got the internship. So by the time you really start to get your career moving, you're probably $200,000 in debt. But if you have a plan, knowing that I want to be a doctor, or knowing that I want to be a dentist, or whatever the case may be, there's going to be some debt there. But if you have a plan, like we talked about, stick with that particular, make sure you have a plan essentially mapped out. It may be daunting at first, as Robert Green talked about the rocket ship example, the same thing where your career is. Once you get out and you're $200,000 in debt and you start working, don't let that overwhelm you. Have a plan and just eat it down little by little, and it'll be your payoff. But my point is, don't let the technical debt, or don't let your debt dictate essentially your career path. Have a plan associated with that, and then your debt will come by the wayside. It's a mindset change, not necessarily. I think the point with the financial freedom, it's not just the financial piece of it, the material piece. It's also a mental and emotional intelligence to kind of get through that.
Mr. Cole, I'm gonna add one more that's a little bit odd, but it's necessary to say it. Mm-hmm. In high school, you have one of the biggest things that impacts you in life are your friends, who you associate with, who's your team, who's your squad. And I had the great fortune of growing up in the neighborhood and having close friends at every stage that I played sports with, went to school with. You learned most of your stuff from your friends. You learned how to be a man. A lot of it, your father, if you had one in the house, played a big role in that. But your network and who you surround yourself with has a lot of impact on you. And some of it you don't realize. I remember my dad always telling me, you won't understand this until later, but take some advice. And I think every man on this phone will say this to you. You will begin to realize in high school that you have friends that are going to have a short runway in terms of how high they rise in life, and friends that have a long runway and how they rise in life. And we talk about keeping it real and sticking with your squad and doing all this stuff. What's interesting about it is life is going to sort a lot of that out for you. There will be some friends that make choices in life that choice is pretty much the end of their life, right? And you can overlay what the circumstance is, whether it was criminal activity, whether it was a bad choice, whether it was a mistake, something that just happened at one night, or whatever the reality of it is. But I'll tell you right now, most very successful people are surrounded by other very successful people. And you don't need a big team, you don't need a big squad, and it's not necessarily even about what they can do for you, but just the socialization of ideas, what they say, what they dream about, what they understand how to go do, what standard they hold you to. There's a saying that iron sharpens iron, right? And if you are your smartest friend in your crew, you probably should add a couple of people to the crew, because that means that you aren't learning a whole lot from the people you're around. So take that for who needs to hear it. But I'm telling you right now, your choice in who you surround yourself with, what they choose to do in life, and what they're about has a lot on your formative years about what you're going to do and what you're going to think about and how far you'll go.
I like that. I like that a lot, Mr. Green. Thank you so much.
Yep.
Moving on to just shift the topic a little bit. I wanted to talk about something that was said earlier. What are some of the biggest advantages that this generation has in terms of getting started building wealth that your generation didn't have, or maybe that your parents didn't have? Mr. Morton, you gave some wisdom today that still holds relatively true in terms of how much that you want to keep in savings. But then, go a little bit deeper and you'll find out it's like, hey, if you keep too much money in the bank, it's going to lose value due to inflation. So based on all the knowledge that's out there, based on all the tools, all the resources, just talk to us about some of the advantages that this generation has over previous generations to leapfrog them.
Yeah, absolutely. I think brother Robert Greene hit the nail right on the head. You can have all the social media outlets that you want,
Yeah.
reading that you want, but I think in terms of surrounding yourself with like-minded individuals that have pretty much similar goals, and somewhat I would encourage maybe even different goals and dreams that you do to really encourage or push you along. So I think there's the media outlets, like you said, the YouTubes, the Vanguard, so much through the internet now that you can get to. So that would be really the first step. But I think the first step is really talking to your parents, talking to getting a network established. I think beyond the social media, getting a network established that's, again, of like-minded people that can challenge you essentially to move forward. I want to get that house, or you've got to have what I still think you got to have short-term goals, and you got to essentially always have your long-term goals to keep. I want to go to college. Robert talked about, I want to get married. I want to get a car. These things that are kind of in the front of you. Well, you got to have a plan, and then you got to have people to help you or enable you as a catalyst to essentially get there. And people that you can kind of confide in. I think the second thing is you still have to do your own homework, because whatever you do, listening to folks, you have to be the master of your destiny, right? You can control the things, you can control, some of the things, obviously some things you can't control, but in order to get from point A to point B, no one's going to walk you there. You got to walk yourself. So I think of it as a combination of the networking. It's a combination of doing the homework essentially yourself, but more importantly, mapping out where you want to go and really just sticking to it. It's a mindset. I kind of go back to that emotional mindset. So I would just kind of leave folks with that.
Yeah. So hearing nothing else, let me get into the last question before I hand it over to our keynote speaker, Mr. Green. So I wanted to get everyone's thoughts on, what's the future of paper currency? What's the future of cash? We already see, before cryptocurrency was even a thing, we already see that a lot of platforms like PayPal, Google Pay, Apple Pay, Cash App, you name it, Square, where you can conduct commerce digitally. Okay. But now with the rise of cryptocurrency and the concept of decentralized finance, like just give your take on, is it here to stay? Should I invest? Should I, still keep cash on hand? Just give us a little bit of flavor. Where do you see digital currencies going?
I can start. I just recently got into digital currency a couple of years ago, the crypto stuff. It's a very, as Robert mentioned, I'm a little later in life. Looking forward to retirement, but for the here and now, I mean, it's still risky, but I think it's here to stay.
Okay.
You see, Trayvon touched on it. I mean, it's part of the Cash App. I've used it. It's part of PayPal. So it's part of a lot of these online e-commerce outlets that the cryptocurrency is now becoming essentially more mainstream. I mean, you see Elon Musk buying tons of Bitcoin. It was an exorbitant amount of Bitcoin, but a lot of the financial institutions now are starting to gravitate toward Bitcoin. So and other crypto means. So I think it's essentially it's here to stay. It's still kind of risky, at this point, at least from where I'm sitting. Being a little later in life, I wouldn't stick my whole 401k in it, but I think it's worth a portion of the portfolio, essentially due to the risk factor. It really depends on your risk tolerance, as Charles touched on.
Yeah, but and I would agree, Mr. Morton, that I think digital currency is here to stay. It's still pretty speculative due to the fact that, hey, the governments haven't regulated it as yet. But I think, as a young person, if you're able to put a small percentage into it, I think it's worth considering that as part of your overall investment allocation. So, like I said, maybe 5, maybe 10% of whatever you put aside to invest. If you did want to dabble in digital currency, I would say at least do your research and consider that as a piece of your portfolio. But you need to be diverse. Diversification is key. So having stocks, having bonds, having a real estate portfolio, it all comes together over time. So getting a little bit here and there over time builds, and you're able to kind of reallocate, and you give things a period. Hey, I want to watch this and how it grows for 2 years, and after 2 years, I can make an assessment if this is something I want to keep long term, or maybe I just take some proceeds off the table and reallocate to a different investment. So, and that's why where the planning comes into place. And then how do you assess that plan? How often do you look at that plan and redefine your investment strategy? And that typically goes hand in hand with where you are currently in your life and how your investment strategy changes over time, depending on your particular situation at that point in time.
So I'll make two comments. One, you should never own any security that you buy. If you're given it, it's different, but you should never own any security that you buy that you don't understand it. Understand it clearly and intimately, no matter how sexy it is, and how attractive it is to return. If you don't know what to do with an oil well, right, or a bar of gold or a bag of diamonds, you shouldn't go invest in those things, right? Secondly, the United States of America is the greatest power source the world has seen ever. And its greatest power source is not in its military. Its military is an outshoot of its greatest power source. Its greatest power source is its ability to control the world's currency. If you don't believe me, read any book around wealth and finance. The world's capital is still denominated in US dollars, not British sterling pounds, not Russian rubies, not South African rand, or any other currency that you want to talk about. If you believe that the United States of America is going to freely and willingly give up power, and there will be a decentralized medium of exchange that will never be controlled by the United States government, you haven't been paying attention to what the US government is about and does. So what I will tell you is that if you decide that you're going to invest a high percentage of your personal wealth, not small amounts, not moderate percentages, but if you decide you're going to invest high percentages of your personal wealth in digital currencies, then you are telling me that you are basically shorting the United States' thirst and ability to control. That's what you're doing, right? And so it doesn't mean that you shouldn't do it. You should just be very conscious of the fact that until the United States comes out with one that it backs with the full faith and guarantee of the United States of America, you are betting against dollar-denominated currencies around the planet. And in the short term, that might be a wonderful bet. We'll see how it turns out in the long term.
Very deep, Mr. Green. Really do appreciate that perspective. So, hey, we talked about it a lot. We really do appreciate all the different perspectives from you, Mr. Morton, you, Mr. Morrison, you, Mr. Selby, and of course, our keynote speaker, Mr. Green. So, Mr. Green, I'll turn it over to you to kind of bring us home and just share any of your remaining thoughts with the group.
Happy to do it. So let me first of all thank you, Mr. Hilton Cole. This is an extraordinary conversation that you have facilitated here. In fact, there are few conversations more appropriate and more necessary for young people today. I am one who believes that people of color in America have a disproportionate shortage of wealth, and our focus on wealth has been limited over the years. So for you to host this type of conversation is very powerful. First thing, I'm trying to share my screen here, and maybe you can help me on the fly. When I said I'm sharing my screen, how do it's giving me a question of desktop one, whiteboard. Can you tell me how to get my presentation?
Assuming that you only have one screen, which is your laptop or computer, I use desktop one.
Okay.
Yeah.
Open systems. It's asking me to do a whole lot of.
And then what I can do is I can pull your presentation up on the side.
Yeah. So. Would you do that? That way we don't. Yeah. Would you pull it up?
Yeah. Just give me a brief moment.
Yeah.
Scroll through my email.
Well, while you're talking about that, this wealth conversation is a powerful conversation. I put it next to health and spirituality and general education. Unfortunately, schools don't talk about wealth creation enough. And sadly, it leaves our students to try and figure it out on their own. So my presentation today, thank you, Mr. Cole. Stay on the cover, the importance of financial literacy and the journey towards wealth creation is actually two presentations in one. The first half of it is going to look very similar to what John Morton talked about. And I'm going to go faster through some of that because he covered it very in depth and very effectively. But let's go to the first slide. So if you are a 15, 16, 17, 18-year-old in high school today, you have an amazing amount of time to do and achieve virtually anything in life relative to finance that you want. You can declare that you want to be wealthy, and there's virtually no limit on what that could be. $5 million, $10 million, $50 million, $100 million, or much, much more. We've seen countless examples of people who have built fortunes in one lifetime. There are two ways you can build a fortune. There are two ways you can have a fortune. You can inherit one, or you can build one. And it's not wealth for wealth's sake. It's not wealth to be better than someone else. It's wealth so that yourself, the next generation, and possibly even subsequent generations of your family do not have to be tied to spending a lifetime creating wealth. What we support for people today is get a job, get an education, get a good job, work that job for a long period of time, enjoy the comforts and success of that, and then help your kids do it. What wealth does is wealth helps unforeseen generations of people in your family spend their life doing other things, whether that's philanthropically providing for others, whether it's creating more wealth, or whether it's just a means of enjoyment because you're not spending 40 years of your life trying to provide for yourself. Next slide, Mr. Cole.
Absolutely. There we go.
So there are 5 important concepts that you have to learn about. And unfortunately, as I mentioned previously, many people only ever really get to deal with 1 or 2 of these effectively. But the first thing you need to be concerned about is earning, right? Earning is how much money can I make? The components of how much money I can make are what skills do I have? How do I market those skills, right? Am I an accountant? And I'm therefore dependent upon going to work for a large company, and that company pays me the same thing that they pay every other accountant at my level? Am I an IT professional? Am I doing the same thing? Am I lending my IT skills to a company that I don't own a significant amount, if any, stock in, and then over a period of time, they don't need me anymore because my skill set can be replaced by the next 25-year-old that is super smart, less expensive than me? Or am I a doctor, right? We tend to think of doctors as being extraordinarily high earners, but the way our society has evolved, doctors and lawyers are no longer at the top of the earnings curve. Finance people are, entrepreneurs are, athletes, entertainers. The higher demand the skill for what you do, and the fewer people that can actually do it, the more you get paid. And I'll give you an example of that. Michael Jackson. Michael Jackson had a skill set that was eclipsed by no one. He was the greatest performer that has ever lived in a field where there's an extraordinary demand for great performers. And when I say the demand is high, it's because people are willing to pay a lot for his skills. Michael Jackson earned a lot of money, but someone earned more money off of Michael's skill and his talent and his ability than he did. And so earning has a lot to do with where you position yourself in the cycle. Saving and investing. Saving and investing, we've talked a lot about saving and investing. You have to become a saver and a saver first. And a saver is not to say that you're going to be miserly or that you're not going to have a good life or you're not going to have anything that's nice and you're going to weigh everything against what something costs. But savings is a way initially in life to build up equity, to build up something of value. And that something of value you can eventually invest. But if you never solve for savings, then you can't get to the investing part of it. Spending. John Morton gave you great insights on spending, right? Do you have to have the finest of everything? What do they call it? Champagne dreams on a beer budget? Or since we're talking to minors, do we have champagne dreams on a ginger ale budget, right? I mean, just extraordinary desire for consumer goods and a limited ability to do it. I don't know when it happened, but I see now kids with $600 jeans on, $800 belts on, $300 sneakers, $400 sneakers, right? 2 gold chains, $1,000 iPhone, right? Where does the money come from, right? What are you prioritizing to spend your money on it? And why do you need that? Do you need it for your own self-image? Do you need it because all your friends have it? Why do you need that? And I want you to think about every purchase that you make of any significant amount. If that remained cash, if that remained something that was investable, right? What would you have over time? And, you know, one of the exercises I'm going to take you through is a tracking exercise, but how you spend your money says a lot about you. Next is borrowing, right? We talked about borrowing, whether it was credit cards or student loans or a variety of other things, but having to borrow borrowing in and of itself may or may not be a bad thing, right? No judgment or morality attaches to that. It's neither good nor bad. But what you do with the money is what's good or bad. Did you borrow because you were buying things you shouldn't buy? Did you borrow because you were pursuing a degree, but you didn't study? And so the degree that should have been valuable is now covered with a 2.2 GPA. So the jobs that you should have been able to get, you can't get, even though you have the degree, because you didn't perform and execute well enough to demonstrate to anybody the value of you having that degree. Lastly, protecting. If you're going to have assets and you're going to have wealth and value, you've got to understand how to protect it. And we'll talk a little bit about some of that later. Next slide, sir.
Excellent.
So 3 fundamentals of personal finance quickly. I think Hilton Cole, when he developed this program, gave you those. First is what Trayvon talked about, budgeting and tracking spending. I want everyone that is learning this to go through an exercise that's going to be very simple, either on your iPhone, on your computer, or good old-fashioned pen and paper. For 2 months, track everything that you spend. Don't change your spending pattern. Just track everything you spend. Every time you spend money, and not go to Target, spent $50. No, write down the item at Target you spent the money on. On this date, at this time, I spent this amount of money on this. Do it at Starbucks. Do it at GameStop. Do it with what you purchase online. Do that for 2 months and add it up. Why 2 months? Because 2 months is a statistically long enough period for you to see the trend. And then let's go back and analyze it. Let's analyze it based upon how much money you spent in the day, how much money you spent during the day, how much money you spent at night, how much money you spent that you made a decision to spend. You could have spent it or not spent it. How much money just compulsory happened? It just happened. It was a Netflix account that it took the money regardless. I didn't make a decision. And begin to create categories of things that you spent money on. Did you have to spend money? Was it a want or a need? And is it something you can get rid of? And over time, you want to eliminate the things that you can get rid of. You want to reprice the things that you have to have based upon a more efficient model. And you want to track how much you save. And by doing that, you basically put yourself on a fiscal diet, right? A fiscal dieting is for many reasons. Sometimes you want to lose weight. Sometimes you want to, eat healthier. That's not the purpose. The purpose is simply not cost cutting. It's to gain control of how you spend your money. Establishing an emergency fund. We've talked about this, so I won't dwell on it. Some people say 4 months. Some people say 6 months. The strangest part of America right now is we're at a place where people are so debt dependent that the average family, this is the statistic, the average family doesn't have $400 for a major expense. If your refrigerator went out, if your air conditioner went out, if your car transmission went out, whether people have wealth or not, most people have something that could cost them more than $400. And yet the average family, 50% is the average, does not have the money to do that. Don't put yourself in that situation. That's a very nervous and a tenuous situation to be in, because if you don't have those things, then as others mentioned, then you have to go into debt, and then you don't control your ability to do it. And lastly, understanding interest rates. Interest rates are the price or value of money. Your interest rates, how much you earn on your savings account with a bank, is very different than how much they charge you on a credit card account. The average credit card account still is around 14% interest, and the average savings is 0.5% interest. So what does that mean? That means that the difference, if you took money out on your credit card, $1,000, and you put it in your savings account, that means that every month the bank is going to give you 0.5% interest, and you're going to pay them 14% interest. That means that you're losing 13.5% every month to the bank. Why? Because they now are in business to lend you money and you're not making money. So make sure whatever you borrow money for, whether it's a loan or it's a credit card, is something that ultimately you are going to be in a position to create value from. John Morton mentioned student loans. Don't be afraid of a student loan if it's going to produce something in the end that allows you to create value, to create wealth. But just be very mindful of interest relationships and how you get into them and how you ultimately get out of them. Next slide, please. We talked a little bit about this: needs, wants, savings. Bad spending habits is 30% of your spending is on needs, 60% is on wants, and you save 10%. What you'd like to get to, no perfect model here, is that a quarter of your total income is spent on your needs. 15% is spent on things you want, and saving 60%. Now that takes some growing to do. That can take a while to get to, but you can get there. You can put yourself in that situation. But the situation you don't want to be in is the situation that would be to the left of all of these, which are your needs are 30%, your wants are 80%, and your savings is 0%. A lot of people live there for a long period of time. That basically means that you're borrowing every month. You're not living paycheck to paycheck. You're living debt to debt. And so ultimately you can grow through these, but track your spending, track it for 60 days and find out where you are. Next slide. So 11 things on financial literacy that are very important. The first thing is understand that finance will affect everything you do for the rest of your life. There will be no period of time in your life, period, that is not affected by your finances. Trust me when I say this to you as a 52-year-old person right now, when you're in high school, whether it's the things you're working a part-time job for, whether you're, just trying to, cover your bills and have enough money to go out on a date once in a while, hang out with your friends, do whatever. From those small micro decisions all the way up to paying for college, buying a house, finance is going to touch everything you do. Left out a word here, build your knowledge about finance, right? We've talked about YouTube. We talked about great books. John and I both use the same example. I'm going to talk about Rich Dad, Poor Dad in this in a minute, but build your knowledge around finance, right? Don't just limit it to what you need to know and learning it just in time. Next, establish good habits, right? The consciousness of spending your money versus the unconsciousness of spending your money. Establish goals. You should never walk around without having a savings goal and being able to manage and track your spending, right? It's not too early for you to have a checking account. It's not too early for you to have a savings account. And it's not too early for you to have a special purpose account. Why do you want to have multiple accounts? Because multiple accounts allows you to focus and be able to manage your money. Checking account, debit card, I understand that. You don't need credit cards at this point in your life. Hopefully you'll never need them, right? But multiple accounts, bank accounts, to be able to track various aspects of your life and long-term versus short-term savings, important. 6, and this one is very difficult to do. As Black people, we don't, and as people of color, we don't talk a lot to our kids about money, right? Most parents have not sat down and had the conversation that Hilton Cole has facilitated today with their children. At the right time, and the right time may not be when they walk in from work, but at the right time, tell your parents, hey, mom and dad, would you all be willing to help me understand how our household finances work? Don't run up and ask your parents how much money they make, but how much does the car cost? How much do we have to pay for our mortgage? How much do we spend a month in groceries? Start to make a budget and come to your own understanding, and you'd be very amazed at how proud and how thankful you ought to be for what your parents are doing. But have a conversation with your parents about the basic finances of life, so that as you start to get out into the world and plan to get out into the world, you don't have the shock of a junior in college who now has an apartment and doesn't realize that groceries cost, $120 a month. That gas for the car is going to be $40, $50 a week, whatever those prices are. Begin to have those conversations with your parents. And what I will tell you is, if you approach it, most parents will have a conversation with their kids. They may not give you all the numbers, and they may not lay out everything that they're spending, but they will help you understand how they balance the budget and how the household finances are started. Open a savings account and regularly deposit money into it. John mentioned it, 5, 10, 15, $20 million. Start where you are. If 5 is what you can do, put $5 in a month, but don't stay at $5. Grow it. Start to put in 10, start to put in 25. Set goals and look at your account frequently enough to be able to understand and assess whether you're achieving the goal. Produce income, make money, right? I've heard people in college, every college student ought to have a job, right? Something they do to earn money. Every high school student ought to have some type of hustle, cutting grass, babysitting. I mean, babysitting pays an extraordinary amount of money, 1 hour, 2 hour, 3 hours. You can make money and you can begin to build sound financial skills today. And if you make money and you preserve your money, you won't ever have to fall into the debt traps. I told you about number 9, tracking your spending. In life, one of your goals should be to become your own bank, right? Not be a bank, not loan everybody else money, but becoming your own bank is a financial principle around, have you saved enough money to lend yourself money for the things you need in life, right? So don't go get the credit card. Don't go get the specialty financing. Have you made enough money where your savings account, your stock portfolio, you can lend yourself the money you need, right? This is an important characteristic for people of color, because we often don't have family members, right, that can give us money for things, right? A great example of that is going to be when you first get married as a person of color, you're going to get a whole lot of cups and containers and glasses and Tupperware. You're not getting the tens of thousands of dollars that some of your white friends or your Jewish friends or your Asian friends are going to be given to start in life. But try to become your own bank. When you talk about 20s, 30s, 40s, if by 40 years old, you've saved enough money to be your own bank where you can then not take on any debt for any reason, you'll be in a great situation. And lastly, protect your credit at all costs, right? The ability for you, one of the things I did for my son's a senior in college now, but when he became a freshman in college, I added his name to a credit card that I have so that he would establish credit. And by being a credit card that I have, I told him I was going to do it. I told him why. So he gave me permission to do it. But I added him to the credit card so that he would begin early in life to get good credit. And if you ever have to recover from a financial or a credit mistake, you'll come to realize what good credit means. If you have bad credit, 400, 500 credit score, people will charge you more money for the same loan. You're trying to borrow $10,000 to get a car, they'll charge you 15, 17, 20%, as opposed to if you had that 700 or 800 credit score, they would charge you less. So protect your credit at all costs. The one thing I will tell you is there should be virtually no reason you should ever co-sign for anything for anybody. And the reason why, unless they're your child, right? And the reason why I say that is if the bank won't give them credit, maybe you shouldn't either. Think about that. Next slide, please.
I'll go to the next slide, Mr. Green. I would like to get everybody out of here by 5. I understand there's a lot more content left. We're going to go over. That's absolutely fine, but we do want to
let's skip forward fast then. I'm going to cover 2 more slides and we'll be done. Keep going. And here you can see the 10 lessons from Rich Dad, Poor Dad. I won't cover those, but go back and read this. Keep going. All right, these we'll go through quickly. Jay-Z. Is Jay-Z, what is Jay-Z? Is Jay-Z a rapper? Is Jay-Z a businessman? Next one. Rick Ross. Is Rick Ross a rapper? Is Rick Ross a real estate mogul? I understand Coming to America 2 was filmed at his house. Next slide. LeBron James. Is LeBron James the high school phenom that's played for multiple teams, and some would credit him with being the greatest basketball player at all times? No. Fast forward. LeBron has some of the very best advice ever. Nothing is given, everything is earned. Every morning when you look in the mirror, ask yourself, are you committed or are you not? I like criticism. It makes you stronger. You have to be able to accept failure to get better. The answer to the question to who Jay-Z, Rick Ross, and LeBron James are is, next slide, they're entrepreneurs. LeBron happens to be an entrepreneur that plays basketball better than anyone alive today. Jay-Z happens to be an entrepreneur who happens to be able to rap and happens to be able to understand finance. The biggest career field in the world today, where the most money is being made, is not doctors, it's not lawyers, it's not professional athletes, it's entrepreneurship. And I want you to begin to think of yourself as an entrepreneur, whether you are one or not. What's an entrepreneur, you ask? An entrepreneur is a person that is creating a business. And that business I want you to create is you. You are that business. Whatever you choose to be, whether it's IT, whether it's a finance person, whether it's an engineer, that is one means of you making an income. But that's not totally who you are as an entrepreneur. One more slide. Let's just flash these slides, Hilton. I think it's only 3 of them. No entrepreneur versus employee. I think Mr. Cole can get these slides to you. There's great information on these, but it compares how work versus an employee versus an entrepreneur, how much effort, how much support, how much income. Next slide. Is that it?
Yeah, I think that might be it.
Okay. Well, let me close out on this one. And this slide over in the pink, essential steps before making a decision, talk about becoming an entrepreneur, right? Most people in life will have 5 careers, things that they do in different times of their life to make money. But the real question is, can you market yourself? Can you develop your skills such that you don't have a middleman? You don't have a boss. You are your own boss. Can you put yourself in a position to do that? Can you do it early? Can you do it in your mid-career, or can you do it late? And can you do it in a way that allows you to make money while you sleep and allows you to be someone who, frankly, can do this over and over again, create successful businesses and sell them? I would encourage you, as my final thought, to think about entrepreneurship, regardless of what your career field is going to be. Think about entrepreneurship and how you create yourself in a pattern where you can build a business. And if there's one thing that I would tell you I wish I had known much, much earlier, is not follow my parents' wonderful advice of get an education and get a job so you'll be employed for life, but get an education, go learn something on a job so that you can create a company that will create wealth for you and future generations. I realize we're running over. It's 5 o'clock. I'll stop there and hand it back to you, Mr. Cole.
Mr. Green, thank you so much for that amazing presentation. I'll make sure that I get that out to the group here. I want to thank all of our panelists for coming through to speak to the audience today on the important concepts of financial literacy, financial freedom, making your first budget, learning how to invest in the different investment vehicles you can make, and then just being disciplined with how you grow your wealth. You know, we live in America, we live in a country that's all about consumerism. You know, you have to have the nicest car, you have to have the nicest shoes, you have to have that $500 Gucci belt, you got to have some guacamole on your Chipotle burrito bowl, whatever that it is. But keep in mind that in order to really be happy in life, you'll realize that happiness doesn't come from stuff. It doesn't come from anything that you can buy. It doesn't come from anything that you can get from somebody. It comes from within. Now, on the other aspect, you do want to make sure that the things that you are spending your money on, the things that you are investing, that they're going towards you, that they're making you happy, or they're going towards something that is going to turn into something more later. There's something I want you guys to all research. It's called delayed gratification. It is going to be a grind, now that you guys are in your teens. Me personally, I'm 27 right now, and it is a grind right now to, stay focused. I might not be able to take as many vacations out as I want. I might not be able to, post on the gram or, flex the J's or flex the Gucci belt or whatever. But what I'm looking forward to is by the time I get to Mr. Morton, Mr. Green, Mr. Morrison's age, is to be able to say, hey, I got X amount of dollars in the bank account. I have a corporate job, but I don't have to stay here if I don't want to. Mr. Green hit the nail on the head perfectly when he said everyone should strive to be an entrepreneur. Being an entrepreneur doesn't mean just, having your own business. It means being accountable for all the money that comes into your household and then all the money that comes out, being your own bank. Everyone should have a plan of what they want to do post their corporate career or post, wherever they want to do in order to make that money. That's going to make you fulfilled. And then on the side, you have your financial literacy, you have your money in the bank, you have your fall money so that anything happens, or if you want to change careers or change priorities or whatever, that you have enough financial liquid in order to be able to do so. If you want to have kids, if you want to get that house, if you want to move somewhere else, whatever that it is, you need money to get into the door. All right. So don't be controlled by money. Use it as a tool. That's what it is. Don't let the tool use you. We really do appreciate everyone who was able to join us live for today's webinar. If you're watching this recording on YouTube, we really do appreciate you joining on as well. One thing before I also go, for those that are still on the call, we're going to continue our series of webinars coming up in May on the 2nd. We're going to have another fabulous set of panelists who are going to come in for our total health webinar, where we're going to talk about, in addition to, okay, how to build wealth, how do you maintain your health so that you're able to enjoy the fruits of your labor in order to make sure that you're enjoying your life as you get to an advanced age. We'll talk about things like dieting, the importance of fitness, prioritizing your mental health, how to stay positive, especially in an environment like now, where we're all isolated, where we're all on lockdown. Things aren't definitely rosy, and the importance of keeping an active spirit and prayer life, no matter if you're Christian or if you follow other practices too. Having a core belief system, that's something that guides you in your day-to-day life. So we really do appreciate if you guys would come back for this conversation. It's going to be a great discussion led by a different set of panelists. With that being said, this is Hilton Cole, Director of Guide Right for Dulles-Leesburg Kappa Alpha Psi. We really do appreciate everyone for joining. Thank you so much for the time. Goodbye.